Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the Nasdaq. Okay, we're going to take a look at the Nasdaq 100 here, and then I'm going to show you some technology stocks. We're going to look at the FANG stocks: Facebook, Amazon, Apple, Netflix, Google. We're going to look at Microsoft, Intel, and NVDA. Okay, so first up, let's look at NDX. Okay, this ticker symbol NDX. This is the Nasdaq 100 index, and so as you can see down here, that there was a bounce on Friday. So it has been in this downtrend ever since the middle Bollinger Band broke here on the 19th, and then it got below the 50-day simple moving average. That's the green line, and then now it's below the 100-day simple moving average, currently at 66.20. That is the next key level to break. It needs to break above 66.20 and then get above EMA 8. That's the line there at 66.50. So those are the two big levels next week. Fail to break those levels, and that will signal more downside risk. You can see here on the candle on the 26th, it hit the line and then failed to break that level, and the share price pulled back. You could see EMA 13 up here was tested on the 27th, and that level failed to break. And so basically, the Nasdaq is trying to bounce. Okay, and so the question is, okay, so basically the pattern has been to sell every spike or bounce during the current drop. Okay, so the question is for the next for next week is will the trend continue, or will we see a new pattern begin? And so what I'm talking about here is, notice that there was a red candle on the 19th, and then there was a bounce on the 20th, and the following day a red candle formed, and there was even a gap down open, and then the big drop followed the following day, and then finally there was support found on the 26th. There was a nice bounce, but notice that the next day on the 27th it sold off hard and pulled back. Okay, and so now we have the next bounce. Is the pattern going to continue next on Monday? Are we going to see a red candle and then the drop back below EMA 4 and more downside risk, or is the 100-day simple moving average going to break here and it's going to finally follow through? It hasn't followed through since it's been pulling back on this current pullback, and so anybody that tried to play the bounce has been catching the falling knife. It's been the bears have been winning, and so right now we have to see if it can finally find support. Today on Friday or Thursday, there was a bullish close above the pink line, and that is EMA 4. You can see here that ascending support was holding. That's the support from the February low, and so basically it needs to close or stay above that pink line currently at 65.74. So if you see a close on Monday, if it's looking to close below 65.74, that's going to be your signal that Nasdaq is a risk to hold. It's going to be a risk to be long. The only way that the Nasdaq is going to be back in play for a long trade is if it stays above the pink line. It has to stay above. Anything, it doesn't matter if it's a stock, if it's a cryptocurrency, if it's a commodity, or if it's an index. Okay, it's going to be a risk to stay long if it's closing below EMA 4. That signals that the bears are still in control. What the bulls are looking for now is this type of move over here. You can see when there was the pullback in February, there was the sell-off after the first bounce. It pulled back, and then there was a bounce on a Friday, and then on the 12th, that following Monday, there was follow-through. There was a white candle. It stayed above EMA 4. Notice how the candle stayed above, and that signaled the run was happening. Okay, so you're going to know whether or not the run's happening is if it stays above EMA 4. If you see it drop below, that's going to signal downside risk, and then the next support is this ascending support line, and then you can line that up with horizontal support, this 64.50 zone, we'll call it, and if that breaks, you could see a potential test of the February lows down here at 6,300, and notice how that's lined up with the 200-day simple moving average. That's why it's really down here at 62.67. That's why it's really important that the Nasdaq gets above and trades above 66.20 next week, basically 66.21 because it's 0.93, because if it fails to get above that key resistance level, the 200-day simple moving average will be the target. That will signal that the bears are winning. Okay, so it's all about these two lines, the gold line and the pink line. Now there was a bullish reversal pattern that formed on Friday for the Nasdaq, the bullish kicking pattern, and this is a strong pattern. There's a gap up open and it pushed higher, and so it did pull back from that 100-day simple moving average. But many times a kicking pattern does follow through. Well, so now we're going to see, was this just a big head fake, or are the technology stocks going to actually follow through and have a multi-day run? Okay, so let's look at Facebook. Let's take a look at the individual stocks now. And so Facebook here came up off that 30 oversold level. Okay, so that was you know, signaling that it's been heating up. You know, below 30 on Facebook on RSI was a buy signal, and I did put out alerts about how when Facebook gets below 20 on Fasto, historically that's been the signal to buy or at least play the bounce. You know, trade it technically bounces off of that level, and you could see, you know, you had technical bounces off of that level with a long lower wick that formed on the 26th. So you could see this long wick off of the low down here. There was heavy loading off of the 140s, and so you can see it drove it all the way back up. The share price came back down, and it never retested the 140s. It held that 151 support zone, and then the candles worked back into the bands. Now on the 26th, bullish homing pigeon reversal pattern did form, and that pattern is still in play. It needs to break above and get above the midpoint of this candle in order to confirm that reversal pattern. Basically, now Facebook needs to break the EMA 8 and the 300-day simple moving average resistance zone. It's right here between 160, 150 and 160, 250. If it can get above the line and the blue line, that'll signal that it's ready to head higher. And then you could see that 165 EMA 13 tested. If it fails to break these levels, it's going to signal a temporary top, and it could stall out. Basically, Facebook, if you're trading this long, the only way it's in play is if it stays above the pink line. Notice how on Thursday it was the first close above the pink line since the drop. And for us, that's the technical signal to jump in for the bounce play. But you have to use this level as your stop loss level. If it looks like it's going to close below EMA 4 at 157.84 on Monday, below EMA 4 where that level's at, that's going to signal that the bears are still in control, and it will be a risk to hold long. If it can stay above that level, then it will remain in play for a bounce play. Now, this is your typical dead cat bounce scenario where you know, the bears are still in control, and this was a short cover rally, and you're not going to get a new uptrend until the share price is way up here above the 200-day simple moving average and the middle Bollinger Band, which is the 20-day simple moving average. Has to turn that middle Bollinger Band into support to get a new uptrend. Now, it can get a short cover rally up to that level, but if resistance fails to break, that would signal the top of the bounce. Notice there was huge volume at the bottom of the chart. This is the bullish homing pigeon reversal pattern that I talked about. So this is the last pattern that did form. And then if you look here for Facebook on the, this is the chart that I showed with the Fasto dropping below 20. And so this is over the last year. You can see and then there was this one as well, the spikes, and there was a big run up after it hit below 20 on Fasto, bounce, below 20, bounce. You know, so each of these drops below 20 have been followed on Fasto on the daily chart, have been followed by technical bounces. Okay, and so now here you go again. You're below 20, and now you're back above, and here you are. Is this gonna continue? We'll see if it gets back above the 300-day simple moving average. But just keep in mind, anytime you have one of the top companies in the world like Facebook that gets below 20 on Fasto, and definitely if it gets below 30 on RSI, that's a technical setup for a bounce play. Okay, because it's very rare for it to hit these oversold levels. Okay, if you look here at the Facebook weekly chart, you can see here that the same bullish homing pigeon reversal pattern formed. It's the same pattern that formed here on the daily chart. Okay, the black candle inside of the red candle. Well, that happened to form this week on the weekly chart. And so you've got the bullish homing pigeon this week. We'll see if that pattern will be confirmed, because up here you had the bearish doji star followed by the confirmation red candle last week. And then this week the bullish reversal pattern has been formed. Look at the huge volume at the bottom. So yeah, people sold Facebook, but this lower wick off of this 100-week simple moving average at 147.42. I did put out alerts that was the technical bounce play in our chat, so I definitely recommend. These are all charts that we go over in the chat. I've been posting all this information. So that was the technical load zone off of that level, and it was nice to see it bounce. As you can see, a lot of investors were loading off of that. You got the big green volume bar this week. And so basically the candle this week formed completely below the lower Bollinger Band on the weekly chart. That's still signaling an extreme oversold level. You have Fasto that just got above 23, but you do have RSIs at 39, which is an historically low level for Facebook. Now the big levels to break on the weekly chart are going to be up here at the 50-week moving average, which is the green line, and EMA 4 at 168. It basically needs to get back above 168 to get the reversal going. You're likely to see this type of action. You know, this could happen where you have some sideways action down here, some bounces and pullbacks as the situation gets worked out. But right now it's set up for a technical bounce. We'll just have to see if it can follow through next week. Now the way we look at the daily chart and we look at the weekly chart to find support and resistance levels, but we use the intraday charts for trading, and we find the support and resistance levels on the intraday charts as well. And on the Facebook 15-minute chart, you can see here it hit this resistance level from the 27th. Okay, so that was the high close resistance level. It came back up and hit that level on Friday or Thursday and pulled back. And so it also hit the red line, which is the 200 simple moving average at 160.86. It needs to close above that level. So if you see 161 is resistance on Monday, that's going to be your red flag signal. And then it needs to hold the middle Bollinger Band. It's 159.69, so we'll call it 160. And if you see it drop below 160, that's going to be the red flag as well. So it has to trade above 160 to be long, and it has to hold 160 or 161 to be long, and it has to hold 160. If you see it drop below 160, you could see this 158 level tested from the support from Thursday. And if that broke, the downside risk is that the 50 simple moving average is way down here at 156. And when the middle Bollinger Band breaks and turns into resistance, that's the level that it goes to. And so that's the downside risk. So it's going to be very important that it gets above 161 and breaks this high close resistance. If that happens, the next target would be the 300 simple moving average at 167. Notice it did close on the big volume spike. Okay, let's take a look at Amazon now. And so Amazon got below 20 on Fasto. When you see Amazon below 20 on Fasto, it's your signal to buy for a technical bounce if you're a trader. And it's also an opportunity to enter if you're a long-term investor, because Amazon is such a powerful company with lots of upside potential. And so as you can see here, it's below 20 on Fasto, and that was the bounce. Okay, so it had a nice bounce and run, and that led to a prolonged run after it got below 20. And so this drop here below 20, it had a technical bounce, and it got back above the middle Bollinger Band. But the problem was it failed to hold that middle Bollinger Band on the 26th and pulled back below. That was a nasty pullback last week. And then to make matters worse, there was a gap down. Look at the big gap between low of day on the 27th and then a high of day on the 28th. And so basically this gap here is unfilled. And for a stock like Amazon to have an upward gap, I mean, the odds are that thing's going to get filled very soon. You know, that's the target. And so the last two candles have formed below the lower Bollinger Band for Amazon. Very rare, very, very rare. Look what happens when the candles get above the upper Bollinger Band. So over here, you know, and they pulled back in. Over here, down here, they got above the upper Bollinger Band and they worked their way back in. Well, it's the inverse of that when they get below. The candles could keep riding the lower Bollinger Band lower between the lower Bollinger Band and EMA 4, similar to how they rode the middle Bollinger or the EMA 4 and the upper Bollinger Band higher. And so they could ride that lower Bollinger Band and EMA 4 the same way, the inverse. So what you want to see though are the candles work back into the bands if you're a bull, and they get back above this level. Notice how there was a top that was formed in February, then it came back up and tested that top. This is an old chart, so I'm showing you a chart from when this top was created, and then it broke out above. Well, now it's back to that same resistance level. So this is the same key level that it was failing to break back in January and in February, the end of January and in February. When it finally broke above, that signal that wanted to head higher. So if you see it struggling with this 1450 resistance zone, that's going to be a red flag. It has to get above the 50-day simple moving average at 1469. That's the green line right there. If it can get above that green line, that's going to signal that it's back in play. Notice it's also lined up with EMA4 at 1471. Amazon will be a risk to hold long until it closes back above that EMA4 level. That will signal that it's ready to get that reversal going. It's been really punished. Notice that there was some huge volume down here at the bottom. You know that you've got the lower wick on Wednesday's candle, and then you had the follow through with the bounce on Friday. And so notice that the last time there was this type of volume for Amazon was back here on the February drop. Okay, so and notice how on this giant volume bar here, okay, that lined up with this long lower wick, and so you have the same setup here. You have the almost the same volume as you did in February, and you have the same lower wick. And then notice how you have the white candle and the white candle. So what we're looking for now is this type of move. We're looking for another white candle. Is the technology sector going to give us another white candle, or is it going to have the same pattern that it's had the last couple of weeks? Because notice how it was, you know, you have the red candles, white candle, red candle, red candles, white candle, red candle. So the odds are that if this pattern that's been happening in the pullback is going to continue, that another red candle forms. But what the bulls want to see is for this pattern to finally be broken and for another white candle to form, for the candles to get back above EMA4. The problem is that back in February when Amazon dropped down below the middle Bollinger Band, that's the dotted purple line here, it bounced off the 50-day simple moving average. Okay, it stayed above that level, but this time now it's below it. Now it's become resistance. Okay, it quickly got back above EMA4 on the bounce day. It was above EMA4 on the 12th. Well, it's way below EMA4 right now, and so that's the red flags. Is that even though it's trying to pull a similar move that it had back in February, it's a much more bearish setup now. There's a lot more risk in the chart. If the green line turns into resistance and Amazon fails to get back above that 50-day simple moving average, then that signals that there's more downside risk. And then you're looking, as opposed to buying calls, you're looking at puts, and you want to see a retest of the February low and the 100-day simple moving average at 1323. So is 1323 going to get tested, or is 1500 going to get tested? You know, is it going to break out and run up to that EMA 8? You know, so it's all going to depend on, I mean, maybe it's not all going to depend, but I think a big clue is going to be Monday and whether or not we see a red candle or a white candle for the technology sector. And now notice bullish engulfing reversal pattern did form. So there's the big white candle over the previous red candle. And so this is a strong reversal pattern. Okay, usually this pattern does get confirmed, but are we looking at a head fake? Was this it was the end of the quarter, it was the end of the month, it was the end of the week, heading into a low volume holiday weekend. And so that makes it a tough read because, you know, with what's been going on, we don't know whether or not, you know, there's going to be follow through. You know, this is a really, you know, they set up, but you know, a lot of people were loading puts into the close. And so as you know, a lot of people jumped and took profits. And as you can see on the 15-minute charts for all the FANG stocks and the technology stocks, they had the pullback into the close. Notice the red candles. And so there was this nasty pullback, you know, that could have to do with options expiring. It just was a big pullback. There was no news. They all had the same pattern. And then, you know, Amazon did get the bounce at the end. Notice the big volume and the bounce. Well, basically it's hitting this bottom of the gap resistance zone. So there's a gap between low of day on the 27th and high of day on the 28th. Well, basically, actually, I should move that up a little bit. It's the high of day, and so it'd be the top of this candle right here. And so notice how it came right up yesterday, and it hit the high of day level right there and pulled back. Okay, and so or hit the bottom of the gap level, which was the high of day which is the key level to break. It came up, high of day, hit bottom of a gap, and pulled back. The bottom of the gap is always a huge resistance level to break, so keep that in mind. It's similar to the 300 simple moving average on any time frame. That this is always the big level to break. Well, bottom of the gap acts like a similar type of resistance level. Notice how you know, it's just basically, if it fails to break that level, that's going to signal downside risk. If it gets a break above the bottom of the gap level, then you're looking for a gap fill and a run up to 1479. A run up to the 100 simple moving average would fill the gap on the 15-minute chart, and they would need to break above 1480 to head higher. And then in order to actually get a real reversal going, a clear signal that, okay, Amazon is actually, like, not just dead cat bouncing, not just short cover rally, whatever you want to call it, it's actually having a real reversal. And what I mean by a real reversal is how it bounced here and it got an uptrend going. The only way that it's going to do that is if it comes over and gets above this 300 simple moving average at 1535. If you look here on the 27th, it ran up to that level and it failed to turn it into support. And when this candle formed right here at 12:15, that was your big signal that okay, this isn't happening. And if you didn't get out there when that middle Bollinger Band broke, you had a chance between 1 and 115. This was your big clue. Okay, yeah, the 300s. It's always the take profit zone unless resistance breaks. And you know, it depends on your strategy. On this is for trading, and then it's pulled back. And so if it hits that level again and fails to break, once again it will be the profit taking zone. Okay, let's look at Apple. So Apple here had a good day going. It was up over 3% on the day, and look, it closed up fractionally. This was a really odd close for Apple. It did pop back up in after hours trading. I think it closed at around 168 something after hours, so it's back above 168. Not sure how to. Once again, it's a difficult read with being the end of the quarter and all of that. Look at the long upper wick on it's kind of hard to see on this chart, but you can see that the candle is a doji, and so the close was right about the same level as the open, and you can see it ran to high of day and pulled all the way back, and that shows profit taking. Sometimes they pull it all the way back when people are loading, but usually not a stock like Apple. It's like they were really driving it back into the close, and unfortunately it closed back below EMA 4. Notice how they had it. It was above it the whole day almost. It just, you know, had that dip in the morning, and then the technology sector ripped, and it was literally the last few minutes of the day. I'll show you on the 15-minute chart, and so it has to get back above, and this is where it's at after hours at 168.17. So keep an eye on that level. If that fails to break on Monday, if you're seeing the 168 as resistance and it's trading in the 167s, that's going to be a major red flag. I mean, look at Apple here. When it's below EMA 4, that's the pink line, it cruises lower. You know, it got above and temporarily, and then it pulled back. It had the nasty pullback, and then, you know, it's found support again, but it closed back below 168. That was a red flag, and so it needs to get back above that level. As you can see, it had the bullish one white soldier that had formed. Okay, so right here on this day, a bullish one white soldier reversal pattern formed. That's still in play. It has not been. It could still confirm that pattern if it broke above 173 here. If you see it hit up here at 173, that would confirm that pattern. It was getting close to doing that. So if EMA 4, if 168 becomes, you know, it turns into resistance, and you notice here where the resistance is the green and the gold line. That's the 50 and 100-day simple moving average. Basically, that 171 to 172 resistance zone has to get above that level, and then above the middle Bollinger Band up here to get the uptrend going. Now if it fails to get above EMA 4, what you're going to see is a test of this 200-day simple moving average at 162.50. Okay, so that's the big level to hold on the drop. That did get tested back in February. Okay, so it pulled back and tested that level and bounced off. You know, if EMA 4 remains resistance, 162.50 will be on deck. If you look at the previous pattern, you know, it came down, it had two red candles, a white candle bounced, right, and then two red candles and a black candle where it formed it had the bullish engulfing, and then it didn't confirm it, and then it came back up on this candle on the 12th, and it confirmed the reversal pattern that had formed during the last pullback in February. Well, you have a very similar setup this time. You have the red candles with the bounce, similar to these red candles and the bounce, and then you have two more red candles, just like two more red candles, and then you had the black candle and the black candle. I mean, the last 1, 2, 3, 4, 5, 6 candles are very similar to the 1, 2, 3, 4, 5, 6 candle setup from the last pattern. Okay, and so the last time, in February, there was a nice fat white candle with the gap up open, and it ran. Okay, so is that what's going to happen here? Are we going to get the gap up open since it was trading at 168 and after hours trading, and then it's going to run, and we're going to get a nice little reversal and a test back up to that middle Bollinger Band? We'll see. It has to get above 168. That's the big level. If it's holding 168 on Friday or Monday, then that's going to be your signal that it could be pulling a similar type of bounce as February. And then if it fails to follow through and we see a red candle on Monday, that's going to signal more continuation of the downtrend. Okay, let's look at the Apple 15-minute chart. Look at the nasty pullback. This was what I was talking about. It was so strong all day. You know, it ran all the way up. It was having a beautiful day, and then you know, it got above you know, key resistance levels. You know, it broke out above this 200 simple moving average. You know, it got above the high close. It was pushing higher. It looked like it might make a run up to that up all the way up here to the 300 simple moving average at 173, and then at 315 they pulled it back, and then it got back down below the 200 at 330. That was a red flag. And then the last candle of the day, look how far they dropped it. I mean, they went from 170 50 all the way up here. It hit 171 during that 15-minute period, and they closed it all the way down at 167.78. I mean, that was crazy pullback, and it closed at the low, you know, and with a huge volume spike. And so that did happen to several of the technology stocks, and so they had that pullback at the end, and they really drove it down. They did the same thing to Microsoft, and so yeah, we'll have to see. It has to get back above now that 50 simple moving average at 168.70 or 67, and then it has to get back above the middle Bollinger Band. If it stays below the middle Bollinger Band at 170 on the 15-minute chart, that's going to signal that it's a risk to hold. Okay, so it was a risk to hold going into the close because it did close below support, and so it was a signal on Friday to exit if you were long. And so yeah, just that it signaled more downside risk. We'll see what happens. It was a crazy day for Apple. Okay, so let's look at Netflix here. So Netflix NFLX, it's hitting a very key support level. Once again, fasto, you see it below 20 on the daily chart, and it's a setup for technical bounce play, and that, you know, you're loading on the red, and then you can sell on the white, right? So you can here when it got back below 20, you know, this was a signal to load on Wednesday of last week, and so we did have a lot of traders in our chat. You know, we were all on all the technology stocks, and people were taking positions on Thursday on the bullish setups on the 15-minute charts, and then it did pay off on Friday with the white candles. And so that's way you've got to play it. You know, you want to be setting up on the down day, and then you time it with the intraday chart, and then on the bounce day you're set up to sell, and then yeah, and that way you can be out if it fails to follow through. If you want to learn more about these strategies, please come check out our chat. We're not just giving you plays, we're trying to teach technical analysis in real time. And so as you can see here, it's hitting the top of the prior resistance level. Notice on the 29th of January, Netflix hit a top, it came down, and then it closed above that level here. And this was your signal, okay, it's ready to head higher. Anytime it finally closes above, notice how it hit multiple times. The close above signal, okay, it's ready to keep going. And notice how it had the nice push higher. Well, now it's trying to bounce off of this previous key support level. It's also the 50-day simple moving average. So in my opinion, everything is riding on this green line right now. And so if Netflix holds 285, then that's the load zone. Okay, that signals ride. If it drops below, that's going to signal downside risk. And you can see Netflix come all the way down here, test this 250 support, and test that 100-day simple moving average at 240. That would signal major downside risk. It has to hold the 50-day simple moving average. If it doesn't, it's going to get back below this prior resistance level, and it could correct back down to that 240 to 250 level. So it really needs to bounce. How you're going to know if it's actually reversing is going to be a break above EMA 4 at 297.63. So basically, it needs to be back above 300. So if you see Netflix above 300, that signals it's back in play, and then you could see a run back up to that middle Bollinger Band at 313. If 300 turns into resistance, and you see it drop below 285, that's going to be a major red flag, and 250 would likely be on deck. Okay, a bullish reversal pattern did form on Friday, bullish Haramy reversal pattern. So this is the small white candle and the previous larger red candle, and so we will see if that reversal pattern is confirmed. Okay, if you look at the 15-minute chart for Netflix, you could see here that it's trying to get the reversal going. Okay, so it was setting up on the 28th, it got above that middle Bollinger Band, and then on Thursday, sorry about that, not Friday, Thursday, that's been throwing me off. It did come down and it hit that 276 level, and it found support, and notice how it broke out above. It got above the 290 resistance level. You want to see it stay above 290. It needs to stay above the middle Bollinger Band, the dotted purple line, and the 50 simple moving average at 287. This did close with a buy signal on Friday on the 15-minute chart. Okay, it was a risk to hold because it's closed below EMA 4. But if you want to break the rules a little, and that's how you get the low entry point. But when you break the rules, that is also when you get burned. You can trade, follow the 15-minute chart, and as long as the candles are above the green and dotted purple line above the middle Bollinger Band, the 20 simple moving average and the 50 simple moving average in the 15-minute chart, it's our signal to be long. Okay, if it drops below those levels, that's the stop loss. You have to exit. If it drops below 287, it will be a risk to hold. Okay, it has to stay above the green line. Really, you want to see it has to stay above that 290 level. 289. That's the middle Bollinger Band and the top of this previous channel. You don't want to see it drop below. And then to the upside, it needs to break that 100 simple moving average at 299.40. If that turns into resistance, that's going to signal a temporary top, and you could see it pull back. Now, if it gets above the huge level to break, once again, is that 300 simple moving average at 309.82. Notice how that was big resistance back here in the 26th and 27th. If that level fails to break when it's tested, similar to here, it's your signal to exit. Okay, the break below after it's been holding, this is your exit candle. So keep that in mind. Remember, the patterns never change. The only thing that changes are the ticker symbols. And so we're always looking for the best patterns. And since it's very rare to have stocks like Google and Amazon and all these the largest companies in the world be beaten down so hard, this has been a really good opportunity for trading. Okay, and so this is a good, this has been a great trading opportunity for people that like to trade short term. And so if you look at Google, GOOGL, you can see here when it gets below that Fasto level, again, that's your signal to be looking for the bounce. Okay, so it got back below that level. It's bouncing. Okay, it's trying to repeat that similar pattern as before, where it had the red, the white, the two red, the white, and the black, and so you have the two red, the white, the two red, the white, and so is there going to be follow through on Monday, and we're going to see the follow through of the February pattern where there's another up day, or is it going to be continuation of the sell off? This one didn't even get, Google didn't even get the red candle here when the other stocks got the red candle. It got the open, the hollow red candle, but it's been selling off on white days. It hasn't been able to put together a multi-day run. This is the last time it had two white candles in a row. The last time it had a good run was in the beginning of March. And so what we're looking for now for all these technology stocks is a multi-day run for the swing traders, for people that want to try to ride long for a couple days. And what has to happen, it has to stay above the pink line and the red line. That's EMA 4 and the 200-day simple moving average at 1024 and 1029. If it stays above both those levels, that will signal more upside potential. And then it's got to break above EMA 8 at 1046. Notice it hit that level intraday and failed to break. A close above that level would put EMA 13 at 1063 on deck. If it fails to get above EMA 8, that's going to be your red flag, and then the signal to not be long and to flip to the puts is if it drops back below that 1024 level. That's going to signal downside risk, and that's when you're going to see Google drop down to the 300 simple moving average and break that 1,000 level once again, like it did last week, and hit that 978. We were looking for a load off of the 300-day simple moving average. It got close to that. This longer wick was the load zone. We did put out alerts that was the target, and so and people that are watching the videos, they saw that I was saying 977 was the target. It got close to that and bounced, but that was the opportunity right there. And yeah, you can see here it did confirm the bullish 3 gap downs. It had formed 1, 2, 3 gap downs, and this white candle confirmed it. Now it's trying to still confirm yeah, and then it had the but then it did have this red candle here. The bottom line is that let's just get back above resistance. Okay, let's look at the Google 15-minute chart. And so this is a chart that was put out on the Wednesday of last week in our chat, and it came down and it formed this ascending triangle type pattern. It had the bounce off of low, and it looked like it could break out of the top of the horizontal resistance. We were going by the 1020 high close. We wanted to see a break above that level to signal that it wanted to head higher. One clue on Wednesday that this was setting up was the giant volume. Notice the big volume at the open, and then the long lower wick on the candle on the 28th. That the very first candle. And so that signaled loading, and then it stayed above that level. It pulled back into the close, but then it started off really nice on Thursday, and it kept pushing higher. When it got back above the 1020 level and above that 50 simple moving average, that was your signal to go long. Now it needs to stay above those levels. Okay, so this was the load signal. This was the low. Everybody's loading off the low, and it's staying above that level. Now in order to head higher, it has to get above 1051. That's the 200 simple moving average. If it fails to get above that level and the high close over here on the 27th just above, that's going to signal downside risk. If you see it break out above this 250 to 260 resistance zone, then the next target will be the 300 simple moving average at 1077. It has to turn that level into support to get a real uptrend going. It had a pullback into the close, which was not good, and it did close back below the middle Bollinger Band. That is a red flag. It has to get back above 1039. Notice that it did have the bearish crossover on the MACD, and so that needs to cross back over. That's a red flag, and it had a PSAR bear flip, and so these were all things that you didn't want to see into the close. But yeah, it still did close up 3% on the day, and it still was a victory for Google. But you have to be careful. The 15-minute chart needs to stay bullish. If it turns bearish, it's going to signal downside risk. Okay, let's look at Microsoft now. Microsoft here is trying to get the reversal going as well. It can't. At the same type of scenario below 20 on Fasto has been signals that for the bounce. For a technical bounce, it's happened again, and so here now, Fasto's all the way up here at 41, but it closed back above EMA 4 and 8 on Friday, so that was a bullish close. It got above the pink and the green lines. It has to stay above 961. If it drops below 961, that's going to be a red flag. That'll signal continuation of that downtrend, and then you'll see the 100 simple moving average at 88.33 tested. That was tested back here in February. It was tested here on this drop, and it held, and it was even tested on a Thursday. It bounced off of that level, which provided a nice trading opportunity, and then but it came back up, and it was briefly over the 50-day simple moving average at 92 intraday, but it pulled back. It has to get above 92. 92 is a big resistance level on this chart. If it fails to get above 92, that's going to be a red flag. And now, if it gets above, it has to get back above the middle Bollinger Band. It did close above that level on the 26, and it failed to hold and pulled back. If you see it trading at 93 and higher, that's going to be a signal that it's actually has a reversal going. Right now, it's trying to bounce. It has the similar pattern to back here. Where you had the white candle, the 2 red and the white. So you have the white, 2 red, and the white. Is it going to reverse or because you have the white candle, 3 red, white. So you have a white candle, 3 red, white, 2 red, white. So you have 3 red, white, 2 red, white. It's the same pattern as this pattern here. Is it going to follow through and get another white candle? Well, once again, the red flag is that back here it was above on the bounce on this candle. It was above the green line. Now it's below the green line. It really, we were looking for a close above to signal that it was more of a green light. And so yeah, the close back below that's adding some doubt, and so it really has to get above 92. If it fails to get above 92, that will be a red flag. Now it did form bullish kicking reversal pattern, and that is a strong pattern. When you get that gap up open and then the push higher and a close above the open on that day, that does signal that it wants to follow through. So we'll see once again, is Microsoft giving us a head fake here? Or are we going to get actual a real uptrend? And so what happened on Friday on the 15-minute chart for Microsoft, this is a chart that we put out in the chat, it came up and it hit the 300 simple moving average, and it failed to break that level at 92.26. And so yeah, congrats to those that did nail that high there, because we did put out alerts that it was hitting that zone, and our strategy is to lock in gains if it fails to break that level, or at least take some profits off the table. And so congrats to the traders that were following that rule. Good job, way to trade. And so it did pull back, and it got back below that 200 and 100 simple moving averages. It needs to get back above those levels. Okay, so it's going to be a red flag if 91.50 turns into resistance, and then it has to get above 92.26. If it fails to get above that 300 simple moving average, then it's not going to head higher. If it drops below 91, gets below that middle Bollinger Band, that's a red flag. You would have that 50 simple moving average back on deck. You know, it's just really all about it breaking above the 92 resistance zone and turning it into support in order to head higher. Okay, now let's look at Intel. Intel had a huge day on Thursday, so congrats everyone. This was like this was the most bullish, okay, of the tech stocks, at least the ones that I was following. You know, because it closed up 5% and it closed on high of day. I mean, look at that candle. There's no upper wick on the candle. That's a white closing Marubozu candle, which means no, you know, which means bald, which means no upper wick, which shows that the last trade of the day was high of day. So that signals that the bulls were in control of the action all the way into the close. And so that's a strong day. I mean, the last time it had that kind of strong day on the 26th, it didn't work out so well the next day. A big red candle formed. There's a gap up open. And so we have to be on the lookout for that same kind of pattern. Now, this is in a very unique situation for Intel. And this is a chart that I posted last time when it formed this potential top here. It formed the three gap ups, the bearish three gap ups pattern. And that pattern did get confirmed. So that was a nice pullback. And then it pulled back above, and so the bottom line is now it has to stay above this level. It's very similar to the other charts that we looked at that have the same setup. If it drops below that 49.50 level, it fails to stay above 50, that's going to be your red flag for Intel. It needs to stay above 51 now. That's the middle Bollinger Band. Okay, it has to stay above 51. At 51, if it drops below 51, that's going to be a major red flag. The last two times that it got, you know, notice how when it gets above the, it got above the middle Bollinger Band and it quickly pulled back. You do not want to see that kind of action. Okay, so if you're a bull and it pulls back below that middle Bollinger Band, that's going to be a major red flag. Okay, if it holds that level, that would be a nice change in trend from the last few days. And then what you're looking for is a close above 52.50. All right, so that's the all-time high close for Intel. Intel is into blue sky breakout territory. All right, so just back here on the 13th, it hit an all-time high. All right, so that's the all-time high for Intel. And so this close on the 26th was actually the all-time high close for the stock. It never closed at a higher level. And so that, I'll show you the charts here in a second. And so it's pretty amazing that with technology getting beaten down, Intel is here making these all-time high levels. So is it going to close above 52.50 for a new all-time high close? If it does, then it needs to break this 54 resistance zone, and that would signal that it's breaking out higher. And so, yeah, let's take a look here. It did form bullish one white soldier reversal pattern. So once again, we have another tech stock signaling that it's forming a reversal pattern. I mean, you know, usually back, you know, like last year in 2017, these patterns would get confirmed. But now with so many head fakes and volatility and you know, it's much more difficult to read. But the charts are telling you here that there's a bullish reversal pattern and that there's more upside potential. So we're looking for the chart to confirm that pattern. Now look at this Intel chart this is the all-time trading. This is from 1980 to the present, okay? And look at this previous all-time high was back here at 50.38 back in August of 2000, okay? That was the all-time high, 50.35. We are, you know, Intel is breaking that level now. I mean, this is a very parabolic move, right? It looks very, very steep, you know, and it's pushing really hard. Look how this pushed hard, and then it pushed hard again, and then it fell off a cliff. Okay, so this pushed hard, it's pushing hard again. Is this ready to fall off the cliff? Or are those first quarter earnings going to be so good that it's going to push this baby higher? That's the question, right? That's what everybody wants. That's what everybody wants to know. It's looking pretty parabolic on this linear chart here. So we'll see if it can stay above these levels. Okay, let's look at the Intel monthly chart here. And so this is the candlestick chart for it. And you can see here this month it's breaking out to all new time highs. But look at this is the 2000 high close. Okay, from back here in 2000. And then notice that this month it's breaking above. Well, the month is almost over. right? And or the month was over, and so yeah, so this would actually be yeah, I'm sorry to say, but yeah, the month did end, and so this would be the set candle for this month. So yeah, I'm sorry about that. So this candle did close above. So this was an all-time high monthly close for Intel. So that's very bullish. Can it push higher? It's on a 4-month run right now. What it needs to do now is it needs to stay above that all-time high close and stay above EMA 4 at basically 49. If it closes below EMA 4 on the monthly chart, that would be your signal. Okay, that's a bearish change in trend and it's actually having a correction. If it keeps riding EMA 4 at 49 support and it stays above this all-time high close level, then that's going to be a signal to keep riding. So keep an eye, basically, you know, staying above that 50 to 51 level. You know, if it gets below, that's going to be a signal that could consolidate. Okay, let's look at the Intel 15-minute chart, and you can see here it had that very this is the move that all the other technology charts that I showed you wish they had. You know, because this had the pullback as well. You could see here it was setting up on Wednesday. You know, it got above the middle Bollinger Band into the close. It was trying to turn that level into support, and then it broke out above the high close horizontal resistance level on the first candle of the day. So this was the level to break, the 12 o'clock close, and then it got above that level. That was signaling that it was heating up, and Intel stayed pretty strong. Other stocks pulled back, and this had the rode the 50 simple moving average. That's the green line, and once it finally turned that into support, that was your signal. Okay, Intel is really making a bullish move, and then it did get back above all the other moving averages. This is the 100, 200, and 300 simple moving averages. It broke above that level, and then notice how Intel pulled back like the other technology stocks at 315 and 330, but an amazing thing happened. It bounced. There was major buyers. Look at that huge volume. I mean, we're looking at 21 million shares into the close, and it pushed it all the way up there to the high of day. That was an amazing move. So now it needs to get above that level, hold 52, and then the big levels to break is going to be up here at the high close from the 27th, and that's going to be that 53.20 zone. Okay, so that's going to be the big level to break. And then finally, let's look at NVIDIA and ticker symbol NVDA. You can see here, once again, when it gets below 20, and you're a technical trader, you have to be looking at playing the bounce. Okay, so yeah, once again, got below 20, bounced, below 20, bounced, down here, bounced. And so this is holding the 100-day simple moving average. That's the gold line here. Okay, notice how it bounced off of that level back here on the February drop. Well, it's done the same thing again. It held that gold line, and so as long as that level's holding, that is the load zone. Okay, for the technical bounce play. If it see it drop below 222, that's going to be a red flag. That's going to signal downside risk. NVDA below 222 sets up a possible test of the previous support levels over here. Notice that there is an unfilled gap. You have an unfilled gap between these two candles. It could come down and test this support level, and then you could have the 200-day simple moving average way down here at 196 tested. And so that's the downside risk. If the 100-day simple moving average were to fail to hold and turn into resistance, then you're talking about 205 and 196 as the potential targets. It would likely drop down to 200 and fill this gap. And so the bulls do not want to see that. It closed back above EMA 4, and so what it needs to do now is stay above 230. If it stays above this 230.52 level and stays above EMA 4, that's going to signal that it's ready to push higher. Now, it has a lot of moving averages to break. It's got EMA 8, 13, and the 50 and 20-day simple moving averages here. There's a lot of resistance levels to break. The bottom line is if it's staying above that EMA 4, that signals it's in play. If it drops back below, that'll signal that it's a risk to hold. Okay, so if you look here, it did form bullish one white soldier reversal pattern. So once again, we have, they all have these reversal patterns. Is it going to get confirmed, or was Friday just one big, or Thursday just one big headache, or head fake? Maybe a head fake for some. But yeah, it seemed like if you were a bear, it was a headache. But if you were a bull, it was a nice finish to the end of a pretty chaotic month. And if you look here on the 15-minute chart, it came down and it was turning that middle Bollinger Band into support like the other stocks in the sector, and that was signaling it was finding support, and then once it broke above that 50 simple moving average on this candle at 11:30, that was your signal. It was in play. It held that level. As long as it stays above this middle Bollinger Band at 230.47, that'll signal to keep riding. If it drops below, it could drop down and test that 50 simple moving average at 225. To the upside, it has to get above the 300 simple moving average at 241. Once again, it failed to turn that level into support on the 27th. The drop below, these two candles were your red flag to get out. Major downside risk. And once again, if it gets to that level and breaks above and turns into support, that signals it wants to head higher. If that level fails to break, that's going to signal downside risk. All right, there you go. That's some of the technology stocks for you. It was a big day on Friday or Thursday. Are the technology stocks going to follow through on Monday, or was it just one big head fake? All right, that's the million-dollar question. Please come join our chat and join the conversation to learn more about charts and technical analysis. I'll post the link below the video. Thank you.